Hello guys, welcome back to Forex Black Box. Um, in this video, I'm gonna discuss and analyze pound yen chart. So before we start off, I would like to start with the news impact this week. Start from the 12. So we have only pound and USD high impact news, Australian dollar as well. Um, From what I can see or I can tell, that's high impact news coming up by the pound and Australian dollar. That's going to make the yen weak this week. So, in my experience, that I know that yen is going to be weak. Let me just go back to the yen index. That's the yen index on weekly. That's available on TradingView. I will make another video. What is your best tool to use day to day for trading? So I'm looking at the moment at yen index itself, and that's the weekly. So we since 2016, that's the high and that's the low. Then another lower high, higher low. It's higher low. It's consolidating here, and now we broke above this level on the weekly. Okay, this chart is no live chart. It's updated only on the London session, US session, and close after that. So it doesn't really continue to see a lot of gaps. In weekly, you can see the best. If you go to hourly, for example, here, you're going to see a lot of gaps because you don't see the history. What happened in here is all gaps and empty. But empty because this platform stopped receiving data at this time. So the best benefit of this chart is to view it on weekly. So as you can see on weekly, bullish, break that previous high, then after that, the last week, which is that was how big is the candle. In my opinion, this is can go a little bit higher this week up to these levels, and we can stop here or maybe we'll continue. It depends how strong is the news of OZ and the strong of news of USD. If the stock market is start to show some pullback, collapse, or anything like that, yen will obviously become strong because yen is a safe haven and all the money fly into the yen. That's the yen index. That's what it look like on weekly. We have a button here. It could collapse here, could break that low, go a little bit lower to this area, then consolidate from here and see what the next move is. But obviously that's weekly view. If we go down to daily, you can see a lot of gaps which you cannot analyze it very well, but weekly is the best view on this chart. Now I'm gonna move to pound yen. That's the weekly view. Obviously that is Brexit. Pull back a little bit, consolidate, then after that we'll break lower for the flash crash. That's the flash crash. That's Brexit. No one will ever forget this. So pull back from here. Very nice. Push up, consolidate, pull back. If I calculate it by Fibonacci, you'll see it's about 50% more or less. Then continue back up. Didn't break the high. Come back down. Up, down. A few waves. Consolidation is there about 3, 4, 5 months. That's the weekly view, which is big. Contouring all the way up was the last push of the pound before collapsing down all the way down. We moved down wave 1, 2, wave 3, consolidation 4, didn't break the previous high, then went through wave 5, A, B, C. Then we had this Apple crash beginning of 2019, the very second day. So the inside there, that weekly, so if we go to the next one here, it's the 2nd of 2019. I remember that day very well, and crashed on us for like 1,000 pips, around 1,000 pips, if I calculate that. Yeah, from the top of the week or the opening of the week all the way down. Yeah, about 1,000 pips. Spike back up, rejected the price all the way up here. However, didn't make a new high on weekly, and that will count as wave and the second pullback, 80, 90%. Then start consolidate here, up, down, coiling, or no direction. Then start to break that area, which as soon as break that area, I'm short from here. That weekly, which is taking a long time. Obviously, I was not short and I stayed all time on it. I just take intradays, then I stay maybe 1 day or 2 days as soon as I can see momentum moving down. At this area, I'll start to consolidate here. After that, slowly grounding down until 2 weeks ago, pushed really well, all the way down here about 750 bips. That's the weekly view. Let's go to the daily. At the daily, as you can see, we broke the flash crash of yen, which yen getting very strong at one point at the beginning of the year. Then we moved all the way up, and that's the high of the year, and that's the low of the year at the moment. So we broke that area. We broke it really by 200 bips, 250, whatever it takes. Then back up again. Then we just pull back like of that breakdown about 50%, then continue another 50, 60% down. So from here to here, 300 bips. What I'm expecting out of this market at the moment, my trade idea will be standing by, see how the yen react and how the Aussie, because Aussie yen, if Aussie getting strong, yen getting weaker. If yen getting strong, Aussie getting weaker, and pound, Aussie will be long. That's how I trade the market. They're all connected. If one of the bears is weak, the other bear is getting strong and will affect the rest of the bears. It depends where the bear position in the market value. Okay, that line in the bottom here, that's the lowest low since the flash crash of pound, and that's the lowest low of the yen string and the weakness of the Aussie and the rest of the market. So if we take these two areas and play around, because it's not gonna, it could stay the rest of the year here. Okay, if we don't have a good solid information of Brexit, it could come down here, break that low a little bit, and continue back up. Come here, break that low, the high a little bit, and come back down again, and so forth. So I recommend it's about 500, 600 bips range. I recommend that you stand by, you don't trade it yet. At this bottom here, we're gonna see what kind of reaction we get in on the smaller time frames. Okay, I'm looking at daily now. I will drill down to the 4 and 1 hour shortly. But if I put a position here and a long from here at least, and I just get the 50% area and I get out. So that range 600 pips, I can just take 300 pips or more or less the average pips I will plan for. On the daily, very clearly you can see red, 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 then one green pullback, and that pullback was a good opportunity to short more. Green, red, 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 another green back, red, 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 three. We're gonna see another green day. That day is fully down. I'm like, the sell, there's no buy at all. There's no one want to risk anything. No one wanted to buy the pound at these levels. However, this level is going to be very interesting. But if you're going to buy from here, I recommend that don't put your order right there, just below it, because it's going to go lower. It's not coming here only to kiss it and leave. No, it will come down here and push a little bit lower. So whoever put a pending order at this area will be taking out the stop loss right below it. So I recommend that you just kind of, I don't know, last 30, 40 bips, this bear is moving 150 a day average. Just like 45 pips below it, leave your order there. If you didn't get filled, don't disappoint it because it will come back again and revisit it right after it. So if come down here and you can see in the low time frame that is actually trying to push back up or any news. You need to follow up on the news. It's very important. We could, from here to here, again, back to this area, about 200, 300 bips to that green area. It will be resistant here, about 350 bips if you leave an order here. That's my view. Just quickly look for hour down, drilling down. As you can see here, that's a trap for buyer. Went up. It didn't really break the previous high on the 4 hours. I'm talking about small macro area where you can leave your orders. It didn't actually break high here, so you could, as you can see, that to red, then come back to spike back up again. Then when you short it here and you leave your stop loss just above this area here or here, okay? Then if you ride it from here, so far about 300 bips, amazing trade. We know that the yen is strong and pound is weak. Pound is going to be weak just before October, just maybe a couple weeks, or maybe we have 90 or less than 90 days now before the Brexit deal. Brexit, Halloween, October, leaving, and all the stuff. And between now and these days, we will see high volatility in pound. There's going to be a lot of buyer speculating that pound is going to go back up. A lot of seller pushing the market down. But trust me, when the pound gets strong, it will get strong. It will fly because we are in very critical support area on all pound pairs except Aussie and some other pairs that are weaker than the pound in value, and that's why um, you can say the yen is stronger than pound in value. You can say the dollar is stronger than pound in value, but not Aussie, not New Zealand. But when they move very well because Aussie is connected to the stock market and commodity, and New Zealand the same, and yen. So all this all together with time and experience, you will know when something happens in one currency, you know where to look and where to take advantage of. So on a smaller time frame, as you can see, 4 hour, just you can look at it twice a day. You can just start connecting dots. Okay, if that break, you short on a pullback. Here you go, pullback coming, and you ride it from here. You leave your stop loss just above the previous green bar. Here you go, 94 pips spot. You're looking for a bigger run. Okay, you can even hold on this one and continue. You ride it since you know everything is good, the news is good. You ride it all the way down. You close the end of the week, 750 pips. Started when 29 July, finish 9, say, yeah, 12 of August. So how much? 750 pips almost. One pullback, waves. That's how you calculate waves. You see the waves coming down, break that trend line, come back, retest the green bar, very, very small buyer. And they're trying very hard, but Salah just cut it off, cut it short, and bang. Even if you didn't get here, you see that break the previous bar, you jump in the market and you leave your stop loss above the high. There's a lot of strategies. Don't get overwhelmed by indicator or anything. The price action is the king of all trading in any trading. Okay. If that come up here and fill the opening and went down and break the previous low, you jump in, take the risk and make your stop loss just above this one. What you're gonna lose? But let's see. The risk will be like, come on, 30, 40, I'll put 50 bips, 50, 60 bips, whatever. But you aiming for lower because you know that's the crash area. Look, we came here 350. If you get out here, you have a good 350 risk and reward. That probably mark London Open, yeah. Just before London Open, here we go. That's a London candle. And I'm gonna make another video how to backtest as well on any strategy, and I will give you some key point where to look, and that will help you very well every single day. And if you do that for a year or two, you don't need anything else. There is nothing is holy grail or magic indicator or bank knows where the money going. The only one you will, the holy grail is your brain, your ability, and how to trade the market. That's all of it. Okay. So I recommend that you wait for pullback. You need to be strong pullback. I need to break the high. Okay. Let me just start putting some point here. The high need to be breaking. If we broke the high and come back here, we will be doing as follow. We're gonna be, we will say, if we break the high, come to resistance, pullback between 50% and 61%. Then we're looking for high to challenge this area here, or this high 1618. Let's just stick to the percentage because the market love percentage. I would take my profit here. So if the market break the high, if it breaks this area, I can take the risk. If I can see green candles coming up, and I can just maybe jump here, for example, and I leave my stop loss down here, 100 pips, and I will be aiming for this area, 270 pips, and I exit here. I see small pullback come to short, then I will short it. I'm not losing anything because if I short it from here, I leave my stop loss above the high, whatever the high it was. And if it keep going, even if it break the low, I'm winner because I'm a short. Okay, if we break down and continue down here, we'll talk about 550 pips. Yeah, then we can start to count from here, see if we will have another wave. That's my strategy, how I calculate the market. If possibility is continue up here, and I can see a nice push green bars coming into play at London opening. If London open and we see that the direction is up, I will long it and I exit here. Then after London feed away and we start to see some pullback and stuff, you start short and you leave your stop loss tight. Okay, because now we're looking for reversal. If we break that resistance, then we can go a little bit higher. Then we're looking for the pullback to scale in. Okay, I can short it on the way down. I like short and long. I don't really care where the market the main direction is. If I see opportunity, I jump in. I limit my exposure. So that's my risk. 45 pips. My uh, my reward is 190 pips. If it's come down here and continue, I see very big push down to the 88%, 90%. I will leave it running. See how it will react here because I'm expecting it maybe can go lower here or can continue up from here. We are at the 50, maybe more than 50% of this range. Here we go, that range of 700, say 600. Just make it 600 because we're going to break low a little bit. It's going to break high a little bit. So 600, we're right in the middle. We're below the middle actually. So maybe Sunday will open, come back here, do some green mumbo jumbo things. Then after that, we will see how London open react. If London open react higher, we will long it then, and we're expecting to get out here or here at this low. If it's strong momentum, then we wait for the pullback in New York, hopefully. Asia, can push it New York, Asia, push it down. We start to buy from 50%, 61% if we see some green candles indicating that maybe the market will return from there. Then we long from here, we leave our stop loss just below this one. 150 pips, we'll be aiming for 360 pips. So that's my trade view, that's my idea, and I will do a few videos to explain what kind of tools you need, what website you need to look at, what the best website for the news, what the best website for find out how the bear is good, how the trade view works, where to look indicate in the indexes for all the bears, and so on and so forth. So please subscribe, like, and hit the bell button and share my videos. I like to share my ideas and leave a comments. If you need to know anything, please leave a comment or just send me an email. Okay, guys, good luck and all the best. Thank you.